Economy Lens by Capital Trust Properties.
As you know, Capital Trust Properties is the largest property transaction company in Sri Lanka. And today we are bringing this program to you. This is more on the macroeconomic, the status of the country. And we have today Dr. Bram Nicholas, who is an economist and specialist in the areas of industrial development and global economy. And he holds a PhD in economics and topic of industrialization, and has 15 years of experience as an investment analyst, studying and trading in digital equity, currency, commodity, and the bond market. And since 2019, Dr. Nicholas has taught courses in economics and financial markets in Vietnam. Good to talk to you, Dr. Bram Nicholas. So we would like to touch on the macroeconomic aspects of what is impacting the status of investing in our in the stocks and real estate. We experienced a lot of problems in terms of debt sustainability. Do you think that's still there, or what's your take on it?
I think traditionally economists have always looked at two indicators in particular when it comes to the property market. One is inflation, because generally whatever is driving inflation also broadly prices also affect property prices. And so we've seen that in Sri Lanka as well, right? We got a depreciation, a major one in 2022 of the currency by over 50%. And there was worldwide massive rise in primary commodity prices. And those two factors really boosted inflation across the board in Sri Lanka, but also property prices naturally. Right. Okay. Because basically importing building materials became way more expensive. So even the cost of building new property was more expensive.
Yes.
And then on the other hand, of course, economists also look at GDP growth because they're interested in basically whether people are earning more, whether incomes are rising, because that's from the demand side, the driver of property prices.
So a lot of people are talking about debt sustainability and, in the future, are we able to repay? Now we have come to a stage that, there is some sort of stability.
Yeah.
We had high inflation. Yeah, like what you said, the cost of construction increased. So, I think it increased about 300%, making it not viable for construction to happen. But now what we see is that that has come down because inflation now is under control. There was deflation actually, right?
Yeah.
And so things are manageable. But what do you think now in 2028 we have to repay? What do you think about that? I mean, that's a subject that a lot of people are debating on.
Yeah, and I think the worry is basically a repeat of 2022, right? First of all, that we would get another massive spike in inflation, and also costs of building would naturally go up, and that would come from another currency crisis. So I think that's the main concern, because when we look at whether the debt sustainability problem has been solved, I think what has happened is a lot of economists have been, and policymakers for that matter, have been distracted by the wrong things. They've been calling it a general debt sustainability problem when, for me, and I think for a few others, when we really look at it, it's been an external debt problem. So really, where does Sri Lanka get the dollars to repay all the foreign debt? Right. Not necessarily the rupee debt that was the problem. And remember, that's what Sri Lanka defaulted on. Exactly. It was the external debt. And so when you're looking at that, I think the question becomes, where do the dollars come from, the dollar income? And the worry for me and a few others is that that income hasn't really structurally changed. The same weakness remains where Sri Lanka overly relies on, sources that aren't as sustainable as other sources like tourism and remittances.
I think, having said that, tourism we have actually done very well this time. But then again, we had a crisis, right? Where we had COVID, then we had
The Easter bomb attacks before that.
Yeah. So we had 4 years of calamities, right?
Yeah, exactly.
So, I think the rebound happened because, naturally the tourism industry picked up. But what do you think about other FDIs, attracting other FDIs, given that the country's new fiscal policy on, increasing, the taxes? What do you think on that aspect? Because now even for property sector, the VAT has increased, which makes us less competitive in the market. What do you think those aspects?
Well, I think first of all, for foreign investors, their main concern would be the stability of the exchange rate, right? Because for them, they're looking at different possibilities, different countries where to invest. And so for them, what really matters is their return in dollar terms or in euro terms. And so if there's another major depreciation on the horizon, investors would not feel so comfortable investing in the Sri Lankan property market. And there I come back to this problem of whether Sri Lanka has fundamentally solved its debt sustainability problem. Even though there has been this major recovery in tourism and remittances have picked up again, what we know from other countries is that that never really in the long term solves, let's say, the general balance of payments problems.
Right. And also given that we've now seen the, US imposed huge tariffs, right? So, and there is a lot of, instability around the world, right? There are wars around the world, then the tariff problem making it, certain countries not competitive in certain ways. With all that, I think as a country, we are situated in such a strategic location. I think naturally we have actually, gained from all this. What do you think, all this global impact, what would be the macroeconomic impact to us?
No, you're right. I mean, the strategic location is something that should always be exploited if we can. And I think that's what you were alluding to before, right? Where the FDI is coming from other sources,
yes,
not just like for property or real estate, but for manufacturing, for instance.
Exactly.
That would be a major source and has been for so many other countries.
And maybe tech. If we are more tech-oriented now, Port City, for example, they want to be a tech hub, right? Only we still have to see it coming, things coming out of that.
Yeah.
So,
yeah, and I think what you were also mentioning before is more relevant than ever is so the government has seen this as basically a fiscal problem and they're trying to deal with it by raising taxes, yes, right?
Is that the right thing? Well, in your opinion, because for me, being in other countries, like Hong Kong, I feel that might not be the correct strategy for us. Obviously, we have to, collect some sort of, funding, but then is taxing the right way?
Well, you can.
Excessive tax.
Yeah, but there's so many different ways to tax,
of getting,
right?
Yes, exactly.
And I think that's where a lot of people have criticized the new tax structure, saying that it doesn't really make sense to do it in this way. First of all, disproportionately affecting, let's say, the lower income groups. But I think also from a strategic point of view, when you want to attract FDI, why not give concessional tax rates to those strategic sectors that you're interested in? So this is what the successful East Asian countries have always done.
Yes.
Their tax rates overall are not that much higher than that much lower than Sri Lanka's. It's the specific sectors that they want investment in that they've said, right, for this one, you get a proportionately lower one. Yes. So for manufacturing, you get a much lower tax rate because that's what they're interested in attracting. Right. And some countries have done the same with the property market, where they said, we want to attract investors from abroad.
I think that's a right solution. Now, when you see, we have to, even when we are, enacting laws, we have to see that it's doable and, it's sustainable, right? So I think sort of now even the VAT on apartments that have been put might have been, should have been assessed more, because are we competitive with regards to, countries like Dubai, where a lot of the funds might go for housing there. So in effect, we may be losing out, right?
Yeah.
So that is something, what do you think about?
Well, I think this is one aspect of it, right, the tax rates. But the other, I think, which has been quite a point of discussion, is interest rates.
Yes.
And so for any country, this is, of course, important to look at, because generally lower interest rates stimulate investment. And for the property market or real estate, it's the mortgage rates, right? Now, in Sri Lanka, I saw this statistic that maybe you know, that just 20% of financing of property actually comes from bank loans.
Yeah, that's
which
right.
I thought was quite a low number, but I don't know how it compares.
It is very low for the very reason historically our interest rates have always been very, very high. And a lot of people find putting in fixed deposits as an investment.
Right.
So right now, I think that correction is happening where, interest rates are coming down, and that trend is correct. Where, we are still double digit. We've always been double digit. So, compared to other countries, still, for even a new entrepreneur to start business, it's hard because interest rates are high. Yeah. So all of these have an impact, right, on even real estate. To borrow, it's to pay back, it's difficult.
Yeah, and the way that I look at it is, so what is a high interest rate? Generally, we can understand that if interest rates are still in the double digits, that seems high.
Yeah.
But then if we take into account something like inflation, where that generally is a bit of an anchor for interest rates, it's also very high in Sri Lanka. So the real interest rate, if we take like real 5-year bond rates, that is still around 8%, I believe, for Sri Lanka, which is a bit of a benchmark. I guess it would be a bit higher for mortgage rates. But comparing that to similar rates in other countries, you get a very dramatic picture. So, for instance, in India, I think it's about 5%, but in countries like China, Vietnam, similar developing countries, it's around 2%. So that's much lower than Sri Lanka's 8%.
I think that tells a large story on why very few people go for financing, because that's the amount that can afford to repay that installment.
Yeah, no, absolutely.
So, yes. Then in terms of, the consistency of policies, what do you think? Because that is another thing that affects real estate, because if there's inconsistent policies enacted, we cannot plan ahead, and even construction, about 90% of what we get is from outside. So only about 10% is local products.
Right.
Right. So it hugely impacts the construction sector.
Right.
So what do you think about that sort of thing? Because I think we have never kept our policies consistent.
Right. Yeah, that's been a major concern. I think every new government coming in has sort of found a different way of blaming the previous government for adopting the wrong policies. And by definition, then you're always going to have a new policy framework with a new government, right? Because that's an endless cycle then. But I do think it's been a problem, this inconsistency. And I think on the other hand, basically what you're now finding is that it's sort of an accumulation of bad policies as well. We can't just blame one particular government. It's been an accumulation. But for the excessively high interest rates, for instance, like you said, it's been around for quite a long time.
Exactly.
And it's now not only a problem for companies here that need to invest, or basically their working capital finance has become very expensive due to these high interest rates. But it's also a problem for the government itself now.
Absolutely.
Because they need to pay interest on the money that they've borrowed. And to give you a bit of a worrying statistic there, it's currently still the government, out of all the money that they spend, 44% still goes to interest that they need to pay on their debt. For a normal developing country, that's usually around 10%.
Right.
So Sri Lanka pays 4 times that amount.
That's a huge amount.
There's a massive constraint there, and this is causing other problems which also relate to the property market. Is the government is no longer a big player in construction, and that sort of thing, where traditionally they would be able to spend more on infrastructure projects, which would open up more markets, for property development.
That's true.
But now, even though they wanted to, when this new government came in last year, they promised there's going to be more capital expenditure, more infrastructure projects. I think they're finding that they're very constrained by this interest component on their total expenditure. And so this interest rate problem we can talk about it all day. It goes all over the place. The ramifications are just endless. And I think they may have underestimated, the government, what the ramifications were and are. But I think a lot of economists in Sri Lanka have been guilty of not identifying this problem and not giving it the proper attention. Because, like I said,
I think it's a very important factor of our development. I think that is why we have not, gone to the next stage.
Yeah. And again, like the argument has been put forward that in 2020 the interest rate was much too low, and that actually created problems. I wouldn't necessarily deny that, but again, we have
that's
to...
That's very interesting. That's
yeah,
very interesting.
Yeah, because I mean, the same has been said about the US, right?
Yeah.
And Japan and Europe, that their interest rates were too low and they basically created a massive bubble in their economies. Something similar was said of Sri Lanka, but what I would say is, I wouldn't really argue against that, but I would again say it matters where your low interest rates are. You can have selectively low interest rates. So on government debt, you always want low interest rates because you don't want the government constrained by what Sri Lanka is constrained by. For consumers, why not have a higher interest rate? Because we also don't want them importing too much and creating like an import bubble.
Absolutely. Thank you, Bram, for that very insightful information. And we look forward to having you in the next session as well.
Thank you for having me, Minoli.
Thank you.
Glad to be here.
Thank you.
Economy Lens. by Capital Trust Properties.